What's up, everybody? Good morning. February 12, 2024. Get ready to get started with some futures trading. Check out the market, conditions, everything. Can't wait to get started. It's gonna be exciting. Anyway, good morning. What's up, Words on Plate? Ty, Lee, Wisdom King. The rest of y'all, don't forget, subscribe to the channel, hit that like button before we get started, and feel free to check out our Discord. Come in and chat with us while we're trading. What's up, everybody? Good morning again. Been situated here. Ooh, feeling like a good day today. Nice and chilly. Just got back from a small little vacation, doing some Lunar New Year stuff. Drove out to Dallas. Howdy, howdy. Okay. Ooh, like a little tickle in my throat still. All right, starting off the morning, you know how we do it here at Rocket Scooter. We read all the indices. Let's read today. Nice and flat across the board. Nothing too crazy. Market moving nice and rational. So we're inside of DD bands 1, 2, 3, check. This is our 5-minute pre-market check. We do this every single day, so I do all my trades. Below triple B, things are nice and steady and stable as well. So as you're seeing there, so I'm going to check that out. Got my Rocket Scooter front and center. Market's open. Our liquidity maps will pop out. We'll have a little read on the market about 30 seconds in. We'll know what we need to do. Working on my posture. People tell me posture. I'm slouching a lot. I'm gonna try to sit up and be a little more, centered here. How are you guys doing? What'd y'all do this weekend? Try a standing desk as a game changer? I hear that people love those things. The adjust. I have one. Actually, this little thing right here. This little cheapo thing right here is an adjustable standing desk. I use it as my burrito holder and my repository for mail. I should try to play around working on that thing. All right, market's moving, starting slow. Let's get ready to go here. We're gonna go some live future. We're gonna take it easy today. I found out that my CQG account for the Robbins Cup is a 1-day hold on funds that got transferred in on Friday. So technically, they transferred in too late. Friday didn't count, so we don't get started till tomorrow. But money's been wired. Robbins Cup's on. I'm gonna go in there and I'm gonna win this thing. Dude, there's a bunch of scared gurus on there who won't even address my post. I told them I would take them on. We'd play for pinks. I'd take my winning. The winner gets the account of the loser at the end of the year. They all read it. Nobody said anything about it. Anyways, let's get started. Market's open nice and clean. Let's get our liquidity maps, read it up. You got wasted beat ups? Hold on. Oh. I was like, that's so funny because I also got wasted this weekend. B-dubs. I haven't been to B-dubs in a long time. All right, where's my stuff? Where's my liquidity map? All right, got BLU opening a middle, QQQ. That's okay, nice and steady and starting off here. Let's see UVXY, read this market. Okay, let's see what we got. VIX is in a decay pattern. That's good. So you always want to see VIX pointing down. Liquidity maps are going to point you the direction in which the flow is pressing price action. Three Qs. So Qs are opening mean reversion, nice in the middle, nice and steady again. This is going to be a nice, easy, clean bounce around day inside of here. There's really not going to be a lot of momentum, I don't think, on Qs today. The S&P is a bull long up, which is good. What I'd like to do ideally, it's the way bull long ups work. I'm going to pencil here. So trade 1A. 1A goes from here to what's called DD band. So it is there, to here, to there. It's a pretty good R&R on that trade. That's the worst arrow you've ever seen in your life. So let me try to draw a better one. There we go. Let me not draw this either. This kind of looks like suggestive here. Let's not put balls on that arrow. There we go. This is open. It's supposed to be an open. There we go. That's a lot better. Trade 1B is a dip from here to there, or with the stop right there. So what I'm going to do is, which probably coincides right here, an option here. This is a scalp trade. Of course, I wouldn't do anything if it broke down below there. Okay, things looking steady and solid. I don't want to take the right out the open trade because the resilience numbers right here on that side are less than 0. So the way we read this is, let me make this a little smaller here. Okay, whatever. Do that. Resilience is a gap fill predictor. So as you see, when markets are nice and rational or irrational, we have different ways to read this. In our cheat sheet, this helps me decide and determine if the market's going to gap and go or gap and fade. So an example, let's look at QQQ. It's just an example today. Qs are below the box and Q's resilience is negative. So QQQ is expected to have rejection and resistance off of this half gap. So this number right here, this resilience number, is a predictive number as to what is expected at that half gap, which is the halfway point between open and close. So it's expected to have a little bit of a resistance here today. And the S&P also being negative, which is here, which means this is likely to happen. So this is the likely trade today. Likely to fall. So we're going to wait. To hedge. Everybody see how that works? So because res is less than 0. That's it. That's it. That's my whole trade plan. So what we're going to do today is, while this is kind of fluttering up in here, well, unfortunately, I don't get to start my Robin's Cup till tomorrow. I still have some desire to trade in my normal account. We're also moving. Already hedge break on IWM to the upside. Yep. Okay, so keeping an eye on these numbers here. These being negative show the lack of momentum to the upside. So this is less likely to go up than it is to go down. More likely to trade inside of here. QQQ is also likely to find some bounce in the middle. The lack of volatility today. So there's that downside we talk about. Right about here. Don't forget, Friday is the monthly expiration. We always have mechanics leading into that. And I think this is expiration tomorrow. Nope, nope, nope. Don't let me lie to you. Oh, this is one of those fun months where VIX expiration comes a week from tomorrow. So monthly options and equities expire Friday. So Wednesday, Thursday, Friday, you're going to have some volatility from that effect. The following Tuesday is when we roll our futures over until Wednesday's expiration. So this is one of those times when the third Wednesday comes after the third Friday, because the month started on a Thursday. Trust me, just look at a calendar. Okay. So I'm looking for a scalp likely inside of there. This is trying to recover. I mean, it's right on the edge. It's not strong enough right now for me to have a lot of confidence in this. I don't short either. In greater bull markets, the CD ratio is 87, which means this bull zone is definitely going to likely support. Definitely going to likely. I think that's a real descriptive way to say something. So this is going to be because DD is greater than 0 or greater than half, sorry. This number here, the bull zone also supports in the S&P. So 3 things we look at every morning. Everyone, liquidity map helps you plan out trade along with the flow, where order flow and SPY will take place to balance out market maker risk and options. That's what the liquidity map technology does. So look for those exact plays. There's the 1A trade that's actually starting to try to move right here. Resilience is a gap fill predictor. We flux through the gap. We open pretty much exactly flat. This will tell us if we gap and go or gap and fade. Last thing is ZD, which talks about this thing called a bull zone. If the S&P's ratio is greater than half, then the bull zone likely supports. So today, if I were trading this, like selling puts below 500 would be a great idea. On the 0-day side, if you break 500, it'd be catastrophic. So like basically, like the market is not likely to go here to break, like the lowest probability. Ultra rare, expected. So today we're likely supporting this 50-29 level in futures and starting there. Problem is that right here, the R&R is really good on this trade, but the resilience numbers being negative, this is already early. Look, and here's another thing, already kind of an early warning sign, just to be careful. Some stocks are fighting there, and let's find out which ones they are. I'm gonna take a guess, it's Apple. I always like to look at Apple first, and that is correct. Apple is the fight today. So stocks like Apple, kind of in the same boat, resisting this half gap. And so Apple, you know, obviously we gapped down, I think. Yep, gapped down a little bit. So closed here yesterday, open here today. Apple gapped down and is having trouble sustaining that upward movement. Now this BLD liquidity map is still upward pressure on Apple. So things aren't going to crash today, all you bears, in my opinion. Of, again, this is not trading advice. But Apple is likely kind of going to stay inside of here today. Right? The ultra rare would be the 187.5 break in Apple. So big stocks are likely to hold the fort. So the indices are probably going to, like, you know, try to fight their way lower and then kind of catch themselves before they drop too far. Not a good trading setup without a lot of momentum. Of course, being below monthly hedge pressure and leading in the monthly expiration is also resistance. So it just tells me that a lot of the NASDAQ stocks are topping off. So the upward trajectory and momentum of like a big up day, not going to happen today. We can already see that. And you guys have been here long enough to know. Feel free to hit that like button while you're waiting here, you guys. Like look down, and then I think it's this way, and down there there's like a heart or a thumbs up or a star or purple moons and yellow horseshoes. I don't know, click whatever it is. Give us some love on the stream. I'll eat my burrito real quick. I'll go out. Do you think the VIX might do a little balance due to CPI tomorrow? Could be. Could see a little bit of activity leading into it. We're temporarily down for maintenance. How about that? Well, I guess we know who's bearish. I think the investing.com folks should update their screen. This is comical. Aw. How upside down are you on your shorts, investing.com? It's cute. I mentioned the one guy at the office who made this is like, shut up guys, it's going down, I promise. Promise. Market's going down. Actually, there's a little bit of a feed here. Let's see what we got. February 13th. And CPIs tomorrow in the morning. If I want to make a bet, well, the expiration is gonna be the big moving mechanic. I would say that I expect CPI to do this or to do this. I don't think it's gonna be a game changer. It's gonna be expected. CPI is gonna come down. Remember last week there was a revision on CPI that went from like a 0.3 to a 0.2 on the last read, which caused the market to move very rapidly. Fed is expected to lower rates with 3 rate cuts this year. All these things are priced in, so the CPI has to come in as like a bombshell, like really come in beating expectations. They're coming as a huge change because the market is already pretty much priced in. I think everything's gonna happen. So the fact that the VIX itself is not showing any warning signs of being close to any major pivots is showing me that the market is stable. The expectation of the VIX. I think the market's not gonna respond crazily to it unless it's a huge miss. Great question, Bring Bulls. You would see VIX like questionably close to some really strong pivots if people were starting to anticipate something bad happening or bad news start to leak through. So resilience is starting to get worse. The market is, this is likely a gap fade sort of situation. So we're likely to have some downside here as I've drawn on my screen. Great question though. So I like to look at VIX for clues to answer questions like that. If like we were trading up in here and playing questionable here, I'd say like, aha, somebody knows something about CPI because VIX is starting to challenge some key resistances, right? But it's not. So it tells me that the market is likely to price in the expectation now. So CPI might create a little bit of a move and bounce back like that. And that's just because there's no volatility expected. So whatever V happens is going to crush itself very quickly. Like, I don't think it's going to do this. I don't think it's going to do this. We all know, but still, I think it's going to come in pretty expected. Right on par. You're thinking about going in big short? Go for it, man. Good luck to you, my friend. I know you've been saying that for a while. You are one of the people in here. I do believe the market's going to come down. I like to hear your thesis on that. Let's talk about that. Okay, I'm going to show you how liquidity maps work. Let's test out some of my little screens here. Look at this. Hold up. Trying like redecorating the stream. We're starting a bunch of new stuff this week. How does this work? Hey. So like down here, and this little guy right here, there's some space for like, look, there's a like, shooting stars. Look how pretty this is. Little pew, pew. I'm gonna put maybe some like decorative things over here, like this way. Try to figure out what I want to do here. Yeah, just little cutesy things we're doing over here. Trying to redo the stream and build some cool stuff. We do analyze COT. Do I still think we're still going up? Yes, I think we're rallying through March, April. I don't think we're stopping at all. You can look at VIX futures contracts. You can see the forward curve is flattening there, and the expectation is the market is losing all its volatility. We'll talk about that in a second, but like I said, we need some kind of bearish catalyst or volatility. One of the two would cause the market to come down. Volatility is something we do not have, and there's no signs of that. So we need a surprise news event to create turbulence in the market. Number two is the bears are so ingrained in their short positions right now that any squeezing is just causing the market to just move up and stay where it is. There's no move up and retrace, move up and retrace. Lack of volatility means the market is not having those V's, those retracements. It's going up and just sticking, going up and sticking. It's purely a short squeeze. There are shorts that are hemorrhaging that are having a hard time staying in their short positions. And that's what's moving the market up mechanically, while others, bigger stocks like Apple and stuff are kind of staying put. There's just every day that you're in a short, it can cost you money to hedge against it, right? So the bears are kind of losing hope because the bear catalysts are kind of fading away. I think a pullback is, healthy. I just don't see signs of it yet. Like I said, every day we wake up and we read the balance of flow, and right now the balance of flow is still bullish. There's a dip possible here. I would say that the mechanics could be that monthly expiration can create a little bit of selling pressure. The Thursday, Friday before the end of this week, possibly like that. Anyways, love you guys. Thanks for tuning in, being here. Trend is your friend. Connor, I agree with. Bearing bulls, expect next month CPI might go up. Been noticing prices going up the last 2 weeks. CPI is always a month delayed. Yeah. I don't know. I agree. Except like the other night, while I was on my vacation, I ate at a Cheddar's. Do you guys have Cheddar's? I live in a city. We don't get Cheddar's. But I went to like Dallas area and I went to the burbs and there's Cheddar's. Cheddar's is a restaurant. I've been to one One time in my life before, a million years ago, I used to drive to the burbs for my former career as an engineer. Place called Cheddar. It's like a TGI Fridays kind of Applebee's kind of style of food, but like there's like 4 of us eating and drinking and eating, and the bill came out $50, and everyone was making fun of me because I was so excited about how cheap it was and how amazing the food was. So prices going up. I had this whole conversation about it. I was like, how do they make money with the margins so low? And I was like, maybe that's why they don't have them in the city. And this margarita was like the size of my face for like $7. I'm like, that thing would be like $42 if I went a block away from my house. And they had like these croissants covered in honey butter. So good. Super good. Anyways, Cheddar's was great. How the monthly maps, I can say, let's go ahead and analyze them really quick. And I'll walk you guys through what our morning routine is. So right now I'm not taking a trade until we hit hedge pressure. So I'm looking for a 500 dip to take a trade on. The market's not volatile enough to create a big amount of turbulence for me to want to short on. So yeah, to answer your questions, let's go a couple more things here. Yeah, literally like $50 for 4 people to eat. That's like an appetizer and a half at every restaurant near my house. Okay. Let's start from the top. This is how Rocket Scooter stuff is done. Okay, we have 3 things. We're gonna look at the greater market. Let me teach you guys a trick, and you guys can all do this when you use the platform. By the way, we have this extended trial thing you can see right below. You can check us out, get our platform, get all the data and details come from it. We give you information that nobody gives you. We're the first in the world to create something like this. The engineers on our team programmed a very cool tool to reveal to you market maker positions and options so that you can learn and predict where option flow can possibly be. Order flow will possibly be based on options. So we're going to start at the top and do a couple of things. Let's look at the greater market. Let me just find a little clean spot over here to write. Greater market. Bullish or bearish. Okay. I do this every single morning. I'll read the COT as well as a bonus. First and foremost, the first thing we do is look at this DD ratio. Greater than half, less than half. So greater than half. Good job. DD. Greater than half. That's bullish. We'll put a little tiny up arrow for bullish. Okay. So that means that stocks are likely to support, or the S&P is likely to support a bull zone because the stocks are supporting bull zone. This is a market cap weighted ratio of stocks in their bull or bear zones. Bull zone is where the positional balance is gamma and delta positive, which means order flow will be to the long side rather than the short side. Easy as that. It's like a tilt and scales kind of thing. All right. Number 2, what is the S&P doing on the monthly scale? Trading above monthly hedge pressure. Check, check. That is also bullish. So monthly gamma, also to the long side. That's also bullish. Monthly map. This is forecasting when in time there's inflection points in the market. Let's make this a little bigger here. Monthly map is looking at the entire landscape as it changes. As you guys see, it's starting to become a little turbulent. It's usually really smooth. Let's go ahead and zoom in on the next week. All right. We're just going to look a week ahead of us. Let me pull up my little cheat sheet here. And this cool thing at Rocket Scooter, we give you cheat sheets, help you learn and see these things. What monthly map is actually doing is taking what's otherwise these aggregates and stretching them out to their exact expiration dates and looking at what the options are doing there. So these are bull zones and bear zones, but on their expiration dates. And as you see how the landscape changes over time, we're looking at the bottom and tops of these zones. So let me just teach you how to decode this real quick. I'm gonna draw a line tracing the bottom of these major bull zones. We can all agree that it's pointing down. If we were to move ourselves down to this little cheat sheet here and it's pointing down, it means the bulls are longing more between here and here. This is this week. So bulls are going to long more as time goes by. So even in the greater bull market, on the monthly maps, bulls will be they'll be longing even harder. So longs are going to get longer as there are more calls deeper in the money. Those call sellers will be forced to buy more of those shares as time goes by, as you lead up an expiration. The other side of the coin is the bear zone, also sloping down at the top, like these little tops right here. So this is the bull side, it's the bear side. Bear side's the top of this light gray, also sloping down. This means bears are exiting positions. So bears, or shorts, are also covering. As you guys see, if you ask me my expectation, is the market going to sell off? With all the greater index and positional things pointing up, the greater market is unfortunately bullish. So my stance is going to stay bullish on that, right? I never short a greater bull market. That's why I'm not out here trying to short this one, even though things look kind of a little not so momentum based today. So first and foremost, do that really quick. Greater market, definitely bullish, right? So when greater bull market, see what people say, like, what does that actually mean? Well, that means like if you were to put a gun to my head and said I had to save my family by betting on the stock market, pick a direction, I would pick up. Hope that never happened. Somebody just needs a stock tip. I'd give it away for free. You don't have to kidnap everybody. All right. So let's look at that. Let's look at commitment traders as a little final kind of fun piece. Now we'll look at the positional distribution in the futures market. So these are tricks you can do as a trader. We teach this all the time on how, see, so the market's not selling off, but it's not strong enough for me to go long either. So it's kind of just kind of petering around. I'm not doing much. Okay. So the commitment of traders is a way for you to see similar to what monthly maps was doing, but we're going to look at it in the futures market as well. These things are looking at options in the equities market, but everything kind of is tethered together, right? So let's kind of take a look into the window of the futures market. Different color here. Green will be good. Okay. These are your long only money. Sorry, coughing, a little tickle on the damn weather is changing over here. Asset managers are like your 401ks, your pension plans. These are your mutual funds and stuff. These are this is your long only side of the money. And your long only positionally is becoming more long. You see right here where I'm circling this line? Since about October until now, the longs are becoming more long in futures. Remember in the monthly map, we were talking about longs becoming more long and shorts covering and all that. Well, in futures, let's do the COT. The bulls, we'll call this the bulls. So this is like basically your bulls right here. This is your bears. And these are your market makers. And then just ignore the other reportable. It's a small category. This is like Federal Reserve banks and things like that. Central banks, I mean. And smaller unreportable firms. Here we go. Or smaller reportable firms. Usually that yellow line just kind of doesn't really trend much. So you're looking at the bulls against the bears against the dealers. So the green is becoming longer as the net position of all funds is becoming longer. So it's a larger net long position in S&P futures. This is futures. So COT, the bulls, are also over time. So this is historically, while the monthly map is looking into the future, this is bulls longing more and bears covering shorts into the future. COT is just kind of analyzing the past. So that's why we kind of like put it on the side. It's kind of a second layer of just seeing what's going on. In the past, the bulls have become more long. I mean, we've been seeing a rally since then. Like, I mean, here's the inflection point from here to here. Stock market's only gone up. Well, because asset managers are buying. It's a little storybook there. Bulls were long over the last 3 months. Bears. The bears are also shorting against that as well. The bears are shorting harder. And now they're very, very, very short right now, just like they were at the bottom of the sell-off. You know, it's pretty nasty. But the thing is that bear shorting does not create turbulence in the market. Usually, when you see these green and blue lines pinch or pull from each other, the market is liquid. We call this liquid market. Liquid. This one is the most liquid where they fan out. This is the most liquid. This is a great situation for you in the long side. Liquid is the opposite of volatility. 1 over volatility is equal to liquidity. So the more liquid something, the less volatile it is. And volatility is the amount of V's you see in the market. Lack of volatility, you're going to move up without many pullbacks. There aren't any pullbacks here. Market not coming down. Because it's completely liquid. It's not volatile. And the VIX is also decaying. So when you see this pattern in the commitment of traders, usually you see the VIX tanking, which is what we're seeing. Market's liquid, i.e. not volatile, and therefore you're seeing that nice little run up without a lot of pullback. All of you bears, unfortunately, the liquidity of the market is preventing that big nasty sell-off that you want. A little lesson in liquidity there. So rule number 1 of what we teach is that liquid markets do not crash. In the history of liquid markets, they've never crashed. You're going to need the bulls selling to create any downside. Example, there's the downside, bulls selling. Example, here to here, there's the downside. Bull selling. From from here to here. There's a downside, bull selling. You see the trend? So as you see the history of this, there is no precedent for market finding just natural downside because it went up. That's why technical analysis sometimes can bite you in the butt, because you're trying to look for, well, it's gone up too much, it's got to pull back. Well, it's going to go up until these longs start buying, until they run out of money. So another thing, the dealer position is negative. People are longing so hard, even the dealers and the hedge funds are all short. So the market is just too liquid to crash. That's what the COT is telling us. So we're going to have him write this here in little green text here. Market is liquid. And if you guys don't know how to do this, we teach classes on this stuff. This is going to how you're going to understand the market better than anything else you'll learn anywhere out there. So if you don't mind giving us a follow or a subscription on the stream, we love having you guys here. The reason we do so well in our trading is because we understand the market we're in. Tell you a bit more. So liquid, I think there's a U in there somewhere. Close enough. UID. Liquid, not volatile. And we're expecting the VIX to go down. So the greater market, all of our indicators are bullish. Community traders are showing a liquid non-volatile market where VIX is in decay. And all of these VIX products like UVXY is in a decay pattern. So you see how everything in the market kind of ties together. So bears are still unfortunately going to get their asses handed to them over the next amount of time. Months. The monthly maps will predict the future because they show you the future. It's not even predicting anything about it. It's showing you the future. They are showing you exactly where positions are at a point in time. That's the neatest part about this technology. You can see that the volatility you guys are wanting. Okay, so the question is, when will there be a sell-off if there is one? Well, let's look for spaces in between bull and bear zones. Spaces are volatility. And let me pull that little cheat sheet back up. So right now I'm waiting for the market to dip, if you guys are wondering what my trade is, to get a long on it. You can read volatility by also, you can also understand volatility by reading the monthly map. So let's predict what volatility is going to be like. So when you have that space between these bull and bear zones, volatility is increasing. So VIX is expected to go up in this time frame and this time frame. This is about a week after today. So next week, there's a little bit of volatility starting to creep in, and the week after. So leading into the next month, there is some volatility, roughly February 20th and onward. So this month is likely going to finish clean. Then after that, you have some big volatility here. This can be your choppy down days that you want in the S&P before it continues to go up. But you can see that I'm not expecting this clean week right here to create any downside. So even if I'm trying to short this or fade this on the greater scale, everyone type a little yes in chat if you follow, or no if you still don't have any, if you still have some questions here. When I short the market is important. I'm using my tools to even gauge when this market can become unstable. Positions tell all, and positions don't lie. This is the entirety of Wall Street's distribution, and this monthly map is so accurate. I pivoted the market for years with my call outs just using this tool. So I want you guys to know that. Monthly map is all I use to figure out what's going on with the market here. On the greater scale of things. And you all know where I'm going with this. I love bringing up my fancy Twitter posts that I do. So like here, I do this thing, and now this is a tweet from a long time ago. Let me open this. Actually, let me just open up the graphic. Let me show you. I've used monthly maps to really. Here we go. I've used monthly maps to predict major pivots in the market. This is the S&P over time, right? Here. So when everybody was still like after COVID, just kind of give you like a little brag in here. After COVID, people said the market's going to crash. It's going up. It's still got to come down. And then they said, no, there's no pullback or recession from here. We just left one, and the market rallied for another year. At this point, I called for the market to finally pull back to make this bigger. Futures opening suggests much more downside. Monthly maps started showing it as well. This is a possible short-term correction. Volatility is going to be taking over this month and likely this quarter. Sidelines would be a good idea starting now. Imagine every bear in town being bearish, and I call the top here on Twitter, January 5th, right there on that right. This is the candle. That's the one. Let me come down. Monthly map, help me pick a 2-month bear market rally inside of this downside. Remember, that is going to crash. It rallied for exactly 2 months. Again, it helps you with the timing of stuff, right? I remember I had some Apple calls and some JP Morgan calls. I literally got them right in there. I remember I have some videos for like thousands of % I made on those options trades. Okay. Bottom for 2022 on this green candle right here. I said this is the bottom, period. And the market's bottom until the summer of Q2 of this last year. And there was Q2. We literally found the bottom. Again, monthly map showed an immediate pivot in the market. We caught it. And that was the bottom when everybody thought the market was going to crash. And when summer came around, I said 6 months later, actually this is in October, so that's 8 months later, come back with another prediction. So I said 8 months we're bullish. We're bullish. Trying to see a pattern here? Monthly maps is a really strong tool, and it's in the Rocket Suiter platform. When the summer came along, I just literally came here and said the recession is over. We're done. And then I said monthly map, which showed more bullish side. We said we're bullish through October. So in October, we said we're bullish through the summer. In summer, we said we're bullish through October. Now, we did have the pivot on the Fitch downgrade, which you immediately caught the next day. But then after a couple months of that, we got back to being bullish again. Catalysts can jolt the market and make it go different directions, but just know that being able to see where positions are lined out is a very, very, very powerful thing. That's why we made it. Looking into the future of when things expire to see what it is. Now, in the future, we can see that the bull side is still getting stronger. And then right about end of March, we can see that there's an immediate inflection point where the bulls are getting weaker. So about mid-March, you can see that the bulls are likely to sell. So we're likely to rally until mid-March in the S&P and then start to see some downside mid-March. Do y'all like this tool? Hopefully you guys like it. Bears are also shorting, bulls are also exiting. So about mid-March is where you're seeing that inflection point in the market. And that's how this works. So the point is that we're not seeing any signs of selling off or volatility just yet. And so the greater bull market is strong and powerful. And so I look at that to kind of give myself some of that, you know, just peace of mind to know that I'm not trying to bet against a stable market. Now the market, while there is potential to have some downside today because some of the indicators are pointing down, you can see that the market's not collapsing under its own feet because everything is bullish on the bigger scale. So because I know everything is bullish on the bigger scale, on the longer term, let's look at today, right? We have 3 indicators to look at for today. Let's pick a different color for today. And we do this analysis every morning. Our platform is really, really good at a quick read. I can read these things super quick. Let's pick a different color. I don't want to make this too colorful. Let's just pick let's pick blue. Okay. Now on the greater side of the bull market, now let's see how we're going to act today, right? First and foremost, let's zoom in on this top left quadrant up here. So you can see that we have like a little bit of a, let me make this slightly bigger. Let's do this. Okay. One can see that to the right, there's a guide on the liquidity map. There's some letters, and liquidity map is a, let me pull up the cheat sheet, is a way to look at options and options hedging to find potential order flow. You might have heard about order flow, unusual options activity, things like that. When we get a step ahead of that, we can predict where the unusual options activity will be before it happens and which direction it flows in. So people usually have these platforms that'll tell you, oh, something unusual is happening in Apple. Everyone rush to your computer, check it out. We're like, we know where it's going to be. We know exactly the space where Apple will have its unusual activity. These yellow and blue lines will predict volume in that thing every time. It's never been wrong. So I'll show you how it works. It all has to do with delta hedging and some of the principles there. You can see I have the blue line here and the yellow line there, blue line, yellow line. And so it tells me that the options structure, the landscape, all balanced for today, there's just a flow to the upside as long as we're above this blue line. So I use that to say, okay, well, if it might stop right there, we're not likely to go down. This is the rare. There's about 25% chance this happens. Expected 75. These are actual backtest results. So we're likely to stay here. So let's read the map. This little black dot is the open. Open, blue, open is like a pivot. So I'm just going to draw exactly what I see there as a potential setup. So I know that if I fall to there, I'm going to get a really good, easy scalp trade right back up to open that I'm going to want to take a good bet on. 75% chance of success. And scalp it there. If we break through open with some velocity and keep going, we rally to some resistance. I'm just going to draw a line there. And label these 1A and 1B. So these are my two setups today. I'm either going to long from here, or I'm going to wait and long from there back to there. This is the more probable trade. So therefore, I want to take the more probable trade. Where's the target we go to? Well, you'll learn in our classes that the only target in the way is this guy right here. It'd be a 5074, which is really far away. That's 3 points away. So from here, it'd be about 504, roughly 504 SPY. That's a lot of return for the risk I take. Now, a couple other indicators that we have. This DD ratio in this top here is an aggregate of what the sum of the stocks are doing, market cap weighted. So that's an 86. And what you'll learn from our cheat sheets is that DD ratio. Let's give you guys a little rocket scooter tutorial here. The DD ratio is bullish, greater than 0.6, if irrational, or 0.8. That the bull zone in the SPY is expected to support. So already, I'm going to say that because that ratio is nice and solid, that the bull zone is actually going to support right here. Oh, there's already bull zone support because hedge pressure is there. We also have more confluence on the DD ratio. This is liquidity map. This is DD. So DD also shows support at the same spot, bull zone. So not only do we have the greater bull market, but we have the market not so volatile and likely flexing up with a really strong support at 500 today. Two indicators are pointing at 500 as support. It's really awesome. Number two, and this is kind of why I'm not doing anything right now, is this final little piece called resilience. Resilience is a gap fill predictor that looks at something called the redistribution zone. Easier to see in any other stock because S&P open flat, so there's no box. The open and close are all stacked on top of each other. You look here, UVXY, for instance, closed here Friday, open here today. And so inside of this box, you can predict what happens inside this box pretty accurately with this tool. If resilience is greater than 0, then pretend this is SPY, then the S&P supports there. If it's less than 0, it resists there, in a nutshell. So the caution today is, while the greater market is bullish, one of our tools is giving us a warning sign. So because of that, this resilience number being negative, this number being negative, this white one, that I'm expecting the dash line to be resistance. So I'm expecting some downside first. So this leg is more probable. We're more likely to slowly trade to there to bounce off of there. So because res is less than 0, I'm waiting for a dip to there. And it's just going to probably float around. Now, I could also get in early just in case the market recovers itself. There's only about a 10-point drop if I'm wrong. So I'd put in a small position here. I could always long with something and then long again a lot heavier there. So maybe if I was trading like micros, for example, I could put in 5 there and then like literally hit it with 15 more there. Get a too many position with the stop at the same spot. So expected move today, when you add it all up, is that over time, the market is just going to be higher rather than lower as days go by. And then today, we're likely to maybe trade lower before we kind of come back up. So today, we're probably stuck in there. Not a lot of movement. Something's pointing down, something's pointing up from right in here, and the greater bull market's going up. So here's some things I'm going to take from that. A, I'm not shorting this. B, I'm not longing from here. I'd rather long from there, and then we're going to wait it out. And that's why I'm not doing anything. So everybody say, like, why aren't you trading, Matt? Because you guys watch me trade for long enough. You guys know I have like a 75, 80% win rate. I don't lose many trades because I don't take gamble trades. And that's why you guys watch The small account challenge for our Rollins Robbins Cup was up 160%, something like that. Like literally, if that account was in the Robbins, I'd be in first place. I plan on being in first place. I plan on not being happy unless I get first place. So I wait and only take trades that I know are good, and then I hit them hard. So right now, you see how the market's not rallying really quickly despite all the bullish stuff is because you have this flux mechanic trying to push the market lower. So let me just delete all this. So now what I'm doing is I'm just waiting for the market to pull back a little tiny bit. You see how that works? So expect it to bounce there, which is roughly the same spot as there. And that's it. So now I wait. Now I entertain you guys. And trading is like that simple for me. I don't always make myself do something. I know I can do all this pre-market analysis. I know I was teaching you guys while we did. Probably went like 10 minutes. I can make all these checks in about 10 seconds. I know exactly where to go. I look at it, go, okay, bullish, positive gamma. I click monthly map and I go, like, load up. I look at it and I go, oh, bulls are stronger, bears are weaker. Check, check. Okay, looking great. And I say all four of those things are good. All right. Look at the market. And we outside of any of these green bands. Nope, market's good there too. Volatility decay pattern, great. Come in with traders, load it up. I've done this for over a decade. Nice and liquid. Market's not crashing. Longs getting more long. That was my entire analysis of the stock market. I did all of those things. Did you count to 10? It's that quick when you get really well practiced at this. So in the morning when the market opens up, you got all that detail. In the first 30 seconds before the calculations come out, I'm already looking at these things. 10-second pre-market. And I know and this is all based on positional data. It's not based on technical indicators, right? This is all based on actual positions. Where the bull's position, where the bear's position. They tell you. Options expire. Their values change over time. That's what data is. Their value changes with respect to volatility. That's what IV is. Volatility changes with respect to unforeseen conditions in the market. All kind of things can be piled up into mechanically changing the market, but positions don't lie. And that's why all of our stuff is based on reading positions. So resilience is less than 0. I'm waiting for a trade where I know the probability is high. So I'm either going to take the high probability trade, or I can do anything at all. So I went along from here to there, roughly 75% chance. That's the back test of hedge pressure support, HP. And what was the statistic you guys remember of bull zone support? No, this is rational, of course. There's another statistic. Who remembers? Torch, do we have any codes or funding account through Rocket Scooter? Ah, we do. Hold on. We have. Let me give you a link for Elite Trader funding. Let's start checking. We have. Hold on. I'll get that to you guys. We have a partnership with those guys to get you guys some discounts for Elite Trader funding. So Torch, I'll get it to you. 96%. You guys nailed it. If rational, bull zone support with that DD ratio supporting you is roughly 96%. We had 2 independent back tests done. One of it was done by a member who did it because they didn't believe the 96% was real. They were trying to call bullshit on it. And they did it themselves for 6 months and found out they came out with the same conclusion. And they go, wow, this is amazing. So we are irrational, but this is irrational break to the upside. So I'm still gonna rely heavily that the bull side supports. Normally, if any of these lights are red over here, we don't use these probabilities to that degree. If like the red was pointing down, this is actually a hedge break to the upside. So that's actually a good sign to support this. Any bull signs, nothing is breaking to the downside to show me that I'm not gonna use these. So all data says hedge pressure is 74% supporting, bull zone 96%. This is a very, 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 very like strong support. Highly likely support. Ultra rare. Ultra rare. 96% here. I'm just translating the futures. 2 different indicators. High probability. So we're not breaking 500 today unless the market just does something completely abnormal, right? And so the bet is I'm going to bet that we hold there. And so how would I trade this today with the rare, ultra rare, et cetera, et cetera? One thing that a lot of people do is they, instead of saying, okay, let me try to play this market direction, let me long or short the market directly. Why don't I sell puts down here? Sell a vertical put spread or something. Or just sell puts or whatever you want to do to bet that we don't lose 500. So the probability is really small that we trade somewhere inside of here, even go up, maybe go sideways, maybe go around. There's very low probability that we break through there. So a lot of our traders, and Ashton would teach this a lot, when you have these ultra rare scenarios, people just do the bet on the don't go. Don't go below 500 is a strong, solid bet. Like sell some weekly expiring puts. Like if I were to sell 500s and buy 499s, I'd capitalize on the delta change and they'd both expire. Worthless. But if I sold the more expensive one, I'd be in a credit spread. And then I'd have puts to buffer the loss in the credit spread in case the market did collapse on that 4% chance or whatever. Somebody speaking Espanol. Sorry, you don't know Spanish. Fabiola. Mike, I saw you don't know Spanish. I know a little bit of Spanish. How can you get into this group? ¿Cómo puedo hacer para estar en ese grupo? That means, how can I get into this group? Discord is in the description below. My Spanish is like very weak. Oh, sorry, I'm trying to translate that right. Best thing, not trading the market, has nothing doing, just taking people's money on both sides. Oh, you sent the link? Okay. Oh yeah, Torch, you know Spanish, don't you? Entrar means enter. Inscribime, how do, that means write. I write. I think. So bad. It's so long since I use Spanish. You asked someone why they didn't join the cup. They bought me now. I'm gonna tell you something. I want you guys to take every single guru who talks about the Robbins Cup, and I want you to tell them and Matt's gonna win it. I offered to play for pink slips. I said, let's put 10K in the account, and at the end of the year, the loser gives the account to the winner. I thought it'd be cool if we gave it away to charity, but nobody took me on, and I upped it to 25,000. No one took me on that either. They're like, people are avoiding saying my name just because they all know that of all the YouTubers and all the streamers out there, I'm the one that actually trades and trades well, and I will probably win this thing. I'm in it for friendly competition because I'm friends with all the big names out there that are trading it as well. We're all buddies. But you have your trolls and your weirdos out there who are calling each other out on it, but yet they refuse to. And actually, I found out there's somebody out there, and I'm not gonna name names, who is actually can't even enter the Robbins Cup because they were banned by Dorman, won't even open their account. Ooh, I found that out. Which is interesting. More details coming soon on that. Drama in the Robbins Cup. Oh, Matt knows everything. Take your best guess, guys. There's somebody out there who can't even enter because Dorman won't open their account. I didn't pass compliance. Don't ask me how I know these things. I just know these things. Anyways. I found that to be really funny. 10-second analysis. Yeah, pre-market's pretty quick. Either case, these people love to yell and scream at each other to join this thing. So I stepped up to join it. I'll just quietly trade it. If I win, I'll just win and be whatever. If I don't win, I don't win. I'm not going to be like, what I thought would be cool, just to walk in, win the thing, take the trophy, go home, go about my day. Like it wasn't a thing. So Not a good trading day to start up today. And even so, the funds in the account clear tomorrow, so I won't even get to trade the Robbins thing until tomorrow anyways. So come back tomorrow. You have any questions about what we're talking about, what we're teaching here? Feel free to ask. So I'd like to see the market trade down about 10 points today. And I'd like to load up on a long here, just in my other account. Where it means to join the group. Ah, okay, thank you for letting me know. Subscribe. Inscribe means subscribe. Oh. Excellent. Thank you for telling me that. I'd love to have a scanner feature for bull zone bounce. Ooh, that would actually be kind of nice. So our greater marketplace comes out really soon. You guys like a teaser of the marketplace? Let me see if I can show you something really quick. So let me tell you some cool things we're doing. Hold on one second. Log in here. Little teaser what we're doing. So what we've created. So no, that's not the one I'm trying to do. Okay, actually I can't show you today. We're not releasing this yet. Actually, let me show you that. Let me show you something else. Let me get my login. There it is. There it is. Okay, cool. Oh, we scrapped it. Okay, I have to remake it. Oh, sorry, I can't tease it to you guys today. So what we did was, in our platform, as you know, we've white labeled the charts for TradingView to put inside of our platform, but we've created our own scripting language called Rocket Script, where you can make your own indicators inside of the platform. Not only that, you can make your own indicators and sell them on a marketplace. Not only that, you can make scanner settings, sell on the marketplace, feature it. You can make alerts for the platform, call outs to the platform. You can do all kind of stuff through the platform using our scripting language, and our indicators are stored on a server. Your indicator is stored on a server, protecting your code from prying eyes, and our technology broadcasts your indicator to the platform. An example is my resilience indicator is not calculated in the platform. It's calculated on a separate process on the server, and we stream the indicator to you like a Netflix show. And now you have indicators streaming to the platform, which is a technology that nobody does. And so you as vendors can create your own tools and sell them and make your business thrive inside of our marketplace. We have the search engine we wrote, and you'll be able to have your stuff featured, become a vendor, and all your things can be featured inside of our platform. You have Discord bots that can send alerts to people's DMs. We can text people. All this stuff is automated. When it comes out, it's gonna be massive. Nothing in trading like it. So a marketplace centered around all of our bots in our platform to allow you to create and distribute tools to each other, free, sell them, whatever. That's coming out very, very, very soon. Our beta is being tested right now. We actually had our first marketplace purchase last week. It's like your first dollar in your restaurant. Just pin that to the wall. Got to go to a meeting. Later, B. See you later. Yeah, sorry, there was not a good trade. As you see, the market is flat, and we can talk about today, so nothing exciting happens. I don't gamble. That's the difference between me and a lot of these traders out there. I don't gamble. My stuff is steady. So I either take a trade or I don't. My risk is set, my reward is set. You're not going to see my Robin skep go 100, 0, 250. I'm steady. I'm either steadily growing or steadily declining. So this is what keeps me steady. Have a plan, stick with it. Dan says, follow the cup challenge pretty close. We'll have to see Rocket Scooter take it. Believe you can win. Thank you. Thank you, Dan. Putting the act aside of being just kind of overly cocky for showman's sake. I do hope that some of the streamers, even the YouTubers, anybody gets on leaderboard, like any of my friends out there. I hope anybody does. Bring some awareness, to futures trading. Obviously, we're big proponents of getting people interested in futures trading in general. you know, amidst all the junk out there, all the scammy things that people are getting involved in. You know, futures trading is a really good place to get started as a trader, and I think it's great for the industry. And of course, some friendly competition is always good to have. Unfortunately, there's like a few bad apples out there trying to utilize drama to sell shit products to each other and each other's clients. At the end of the day, the contest by the other people who are wanting to compete, we're all you know, wishing each other luck. I actually was on the phone with Trades and Matt for like an hour over the weekend, just shooting the shit. And everybody out there is excited. They're like, "Oh, I'm so excited you're entering." I was like, "Dude, I saw you on the leaderboards." Like, we're all the people out there who are streamers and presenters and whatever, we're all actually really cool with each other. There's just a few bad apples out there that make it seem like everybody hates each other. At the end of the day, everybody's rooting each other on. I'd be excited if anybody won this that I knew. I'd be like, yeah. Yeah. Thank you, Dan. Just getting your 1099, Uncle Sam, about to get paid. Is Ashton's new group the first marketplace buy? I am. I bought. So the way that we're working here in the marketplace, every vendor or every personality or every person is going to have their own little space in the marketplace, completely separate. That way it's your stuff, my stuff, their stuff. And then, so Ashton is going to be his own entity in the marketplace. I'm going to be my own entity. Matt's going to be a thing. Ashton's going to be a thing. Rockseer is going to be a thing. So Ash and I separated our Discords just to make it to where his Discord is its product, mine is my product. It gets complicated for us to sell a product and split it. It just, so it's like, you put yours here, I put mine here, easy as that. Yeah, so I was the first client of the marketplace. I bought Ashton's Discord service. Yeah, just to test out the functionality. Yeah. Okay, anyways, not really much of a trade today. We usually stream until about 11 o'clock, then we cut out to the Discord. We come back for a Zoom call. We'll have one today. Let's see how this works. The big camera. Hey guys, howdy. All right, Rockseer talk time. We'd love for you guys to join our service. Clearly, we have a 3-month extended trial. Normally, with all the tools, the package is like $199 a month. It's the platform, live trading, data feeds, all that stuff, and all the tools and indicators come with it. But it's like $79 a month for 3 months if you guys want to check out the extended trial. We do coaching, we do teaching. Every day there's a live trading session. Every day there's a Zoom call where we go over and teach you guys how this stuff works. It's all about risk management. It's all about helping traders understand how to plan a trade and take a trade instead of just randomly gambling your stuff in the market. You guys watch me trade every single day with my own stuff. You can see how I maintain like somewhat high win rates because I'm very picky. You might think that, you know, trading is all about going in there and throwing money at the market every day. Not. Trading is all about being smarter than the market. You have to be smarter or faster or have inside information. Unfortunately, the latter is illegal and we don't have that anyways. Be smarter and faster. I'd say that maybe I'm not the fastest person out there, but I'm pretty fast. But I'm definitely smarter. And that's what really puts us ahead. To know things that other traders don't want. It doesn't matter if you are the best trader in the world. You just need to be better than the trader you beat. Just like you can be a piano teacher, as long as you're one lesson ahead of your student, you're always going to be the master. So you need to be better than a significant amount of people out there, and being able to plan your trades ahead of time helps you with that. And that's what we are about here. Risk management is my thing. That's how we are. Very picky with my trades. And you don't see me trade a lot. Up, down, up, down. It's very strict rules I follow. And we teach them. We love you guys check it out. And we will give you some guidance on how we do that. So feel free to go down to the Discord. Send us a message there. Check out the extended trial. And you can just jump in and learn all the classes we have in our marketplace that's coming out soon. And we're going to open the doors to a lot more technologies, not just ours. And your ability to create additional tools and then give them to your friends and stuff is really fun. So the first RX Scooter was when you and Ashton merged. Figured the monthly yearly packages have always kept Ashton stuff in the Discord. We're going to adjust. Imagine that you paid $1,000 for all this stuff, right? Ashton's plus mine should equal the same amount, roughly. At the end of the day, we're going to a la carte all these things. But if you're, like I said, if you know, we do change things up from time to time. If you got in on the yearly at Ashton stuff, you know, our yearly subscription is like $1,800, right? And if you join at the merger for $400, that's the reason we made it so cheap, so that in the future we wouldn't have this problem, Alexander. Does that make sense? Like yearly rocket scooter is $1,800 a year. So if you join at the merger, you got it for like $400. Does that make sense? So that if we were to do what we're doing now and you went to buy both services, you still come in way under $1,800. Your rocket scooter subscription, Alexander, won't change. If you got to go get Ashton's for like another $20, you still come in way under par for what the original price was. So that's why we gave you that massive discount, so that it'll still you'll still get to keep that, even though we put our stuff in different places. What lifetimers will get, everything that we make in the platform, lifetimers will get. The exclusion of, we don't pay for data or your trading commissions on your trading account. So anything that we build inside the platform, you don't get charged additionally for. Sergio, good question. Who is texting me? I think Ashton's Discord is going to be very, very affordable. So you're not going to miss out on a really good deal there. The data subscription is set to launch on the 17th, I've been told. So we're upping our market data feed to the highest level, 100% of the market volume data. This is like comparable to your Bloomberg terminal, your big dogs. And so that's going to come at a very, 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 very cheap $3 a month for everybody. So everybody will have to pay for your data feeds when we up them $3 extra a month. It's nothing, but you're going to get like beautiful, full developed candles. Like UVXY it's just kind of flickery right here because we don't do 100% of the market volume. So now we will. This is the highest data feed package that you can have at the New York Stock Exchange and Nasdaq sell. Oh, so Alexander, everybody here, when we open the marketplace, should not, if you're already a member, you shouldn't feel a change. You're not going to wake up one day and things would change. You should wake up one day and everything should feel the same. Same price, same stuff, same everything. We're going to piece it out that way. Like new members after the fact can like piece together what they want to buy, but you guys will roll into what you have now. It should be seamlessly, Alexander. You shouldn't know anything. Is the data feed only for stocks? That data feed is only for stocks. Currently, what we have in our platform is stock candle data, which is here. You can see it on my screen. Futures candle data, if you have a futures account, which we use CQG. And then we have options data coming into the platform that we use to calculate our liquidity maps. But we don't redistribute the options data to you guys just yet. When we open options trading 1 year, we'll probably have the options data visible to y'all. But so we have all three data feeds coming up: options data, stock data, futures data. How's it work with stocks with no options? Okay, so great question. This particular technology looks at only options and liquidity map, right, for stocks. So unfortunately, liquidity map only works on something with options. This is an S&P thing, so this is an S&P thing. They have options. We have techniques we do teach for stocks with no options, but at the end of the day, options are such a clue to what's going on in the market. It's, if you're just picking things to trade, you shouldn't trade anything that doesn't have options. This extra layer of visibility makes the stocks with options so much easier to trade than stocks without. Now, things without options, Mike, for instance, like some small caps and things like that, you'd have to result to your traditional, typical technical analysis or things, or charting analysis, because all you may have is price data. We don't have a lot of technologies for things without options, unfortunately, but nobody does. Everyone's just, it's just regular technical analysis at that point. So great question. The majority of all stocks that you would care about will have options. So we'll have something for just about everything, but the smaller caps, your like penny stocks and things like that, not all of them will have options. unfortunately. So we just don't look at them. That's a good question, Mike. We'll use other traditional technical analysis, volume profiles, and VWAPs for those things, which is your stronger. Any volume-based measurement is typically what we teach you to do without options. VWAP is support, volume profile, high volume, low volume nodes, things like that. So the data feed change that we're getting before I get out of here is we're purchasing 100% of the market volume for equities data to make the thing fuller here. Oh, here you go. All right. Here is those of you that are looking to get Elite Trader funding discount, go ahead and use our link right there. Yeah, no trade day. It's kind of blah today. Meh. All right, we'll see you guys later. I'm gonna call it. We're gonna get out of here. We're gonna over to the Discord. No trades today. Robin's Cup official trading starts tomorrow. And we'll be live front and center. You can watch me dominate the Robin's Cup. Come here, I'll be live every morning. Show you guys my trades. Go poke your favorite guru and tell him I'm gonna wipe the floor with him. Jokes aside, I'm gonna have fun with it. It's gonna be fun. I love having you guys here. We'll see y'all later. Peace out. Thank you, Dan. Nice to see you, dude. Yeah, and come to the Discord if you don't mind. Mike, everybody, we'll be there to chat. We have a really awesome community. Yeah, love you guys. Bye.